What's up, everybody? Welcome to HPT. Today, we're going to be breaking down the day March 31st, 2025. And we're going to be breaking down once again, the importance of having a strategy that you love, that you trust, that you believe in, that you can execute with your eyes shut. Literally, you need to be able to identify opportunity like it's nothing, because the market is going to play games with you. It's going to mess with your mind. It's going to confuse you. And in reality, it's not that the market's confusing. It's that you are confusing the market. So today I want to break down how beautiful this market is and just the opportunity that it just constantly yields, right? The market is literally nothing other than opportunity day in and day out. It doesn't know anything else. And then you being the surfer, right? If the market was an ocean, you're the surfer, right? Does the wave know who you are? Does the wave care if you have a surfboard? Absolutely not. The wave gets created, right? The wave creates regardless. The wave creates, it gets huge, right? Because of the way the universe operates, right? You guys know I'm always talking about laws, principles. The market is the exact same way, right? The market is going to produce opportunity regardless of who's trading it, right? It's a collective mind. It's a massive, big, just pool of traders. Now, it's our job to get in and out of the market consistently, right? Think of that. It's not our job to be right. It's not our job. See, there's no edge under the sun that's always right. Never. You guys, we need to accept the fact that we are not going to always be right. I don't care if I'm right. I only care if I execute my system properly. And that's what we're going to break down today. Today was the last day in the month of March, right? So guys, click those links below and get involved with the High Performance Trader, right? You click that first link below. It's going to bring you to my website, where we break down the HPT crossover in a document that takes less than 5 minutes to read. Let me share my screen real quick. Let me not forget that. So you click that first link below, and it's going to bring you to this beautiful website that I've created. This website right here has more value in this one page than any other trader out there. I promise you, because I literally made this document so that a trader can literally read it and have an approach in less than 5 minutes that's easy to implement. And shout out to you guys. I've gotten over 100 people to sign up for the high-level summaries that we have been sending out weekly, right? So I sent one out yesterday. All you got to do is put your first name, last name, and email in right here. And you, my friend, will get full access to our high-level summaries. This way you can build the confidence in your approach. So go ahead, click that, get involved. And today is the last day of March, right? So you are still able to take advantage of the 20% off so that you can join our team and execute appropriately, right? So with that being said, guys, go ahead and click that. And you too, my bad, I'm just getting blown up here on the text. You too will have all the information that you need, right? So go ahead, click that below. Now let's look at the two trades that we took. So if you come over here to the Discord, you're going to see, right? This is the High Performance Trader Discord right here. And in the Discord, I collect data. That's what we do, right? The reason why me and my team can execute so flawlessly with no hesitation and no reservation is because of one word: data. Data will always tell you the truth objectively. See, what's going to keep you from making the wrong decision tomorrow? Data. Data is if the market is an ocean, the data is your surfboard, okay? It's your compass. It helps you understand which way that ocean's headed, that massive wave of opportunity, right? Data is what's going to keep you balanced when you step on that surfboard, right? Because the market, look at this. It's just, the market is such a beautiful concept. Think of this, guys. Literally, we have a tool that we can literally extract money out of each and every single day. This market doesn't know who we are. It doesn't care who we are. Guys, the market has one job, to be a market, to go up and down. The market's price action, it's not out to get you, right? I literally used to think this. I literally used to think large money could see my trades and just would always stop me out, right? Large money was always beating me. No, I was beating myself. I didn't have the confidence required. I didn't have the knowledge that it took, and I didn't have the mindset. I didn't have the skill set, and I did not have the right habits, right? See, the market's not getting you. Large money's not getting you. You're getting yourself. You don't have an approach that you can confidently execute. And that's why I want to break down these two trades that we took today. They were flawless, even in the mix of horrible market conditions. I mean, look at this price action. It's all over the place. It was all over the place. We caught two trades. Let me show you. This was our first trade. This was our second trade. Right? So once again, two very simple trades. Now, what makes these trades so valuable is that they're repeatable. The criteria I use to execute these trades is the exact same criteria every single day. Think about that. Can you picture yourself as a trader to be able to get in and out of the market with an approach so repeatable that you don't even have to think anymore? You don't have to guess before the market opens if it's going to go up or down, right? Do you guys do that? I literally used to do that. I literally used to whip out the 1 hour time frame and try to convince myself what was going to happen. And that is probably one of the most inconsistent behaviors we could do, right? That's why over here at High Performance Trader, I always approach the market from a bullish and bearish standpoint, right? So let's whip out that pre-market plan and let's do a trade review. We got Todd on the live. What up, Todd? Bro, I know you caught that off open print today. Look, ready? This is Todd's blueprint move right here. This is my boy right here, Todd. Louisiana's finest. Todd is Louisiana's best day trader. I promise you this. Todd he's not afraid to put in the work. Look at this off open print this morning. Bam! Massive 2-minute move off open print, right? Beautiful. It was just beautiful, right? And this is the thing. When you have an approach that's repeatable, the emotion starts to drift away. When you have data that's very easy to understand, the anxiousness starts to drift away, right? Because let's look at some trades here real quick, right? See this trade right here? This was on March 4th, okay? You guys see this short play off open print in PDL? That looks a little similar, don't it? Yeah, because it's the exact same approach. Every single trade that we take, guys, falls under the same criteria. And you guys know it. I say it in every lesson. But if we want to scale up, if we want to become those $1 million traders that we talk about, we have to have an approach that we believe in, right? If you want to go surf that 50-foot wave, you have to know how to surf a 10-footer, right? You have to have a basic set of principles that you follow every single day so that you can do it confidently, right? I used to skateboard as a kid. Now, I don't know how many skateboarders I got on this, but for you to do a trick, right? Let's just say a kickflip. For you to kickflip, a kickflip, for all those that don't know, a kickflip is when you're standing on the board and it goes like this, right? Catch it, boom. Kickflip. So do I just pick up a skateboard and go, oh, I'm going to go kickflip that 10 stair? Absolutely not. I first got to learn how to ride it. I got to learn how to kickflip. Then I got to master the kickflip, right? And then once I've mastered the kickflip in my mind, then and only then can I take it to a stair set, right? What's the difference, right? Here's another great analogy. Kobe Bryant, one of the best basketball players of all time, right? Kobe Bryant. God rest his soul, rest in peace. He was notorious for being a ball hog, right? People call him a ball hog all the time. I don't watch basketball that much, but we all know who Kobe Bryant is, right? If you don't, Google him. He was notorious for being a ball hog. Now, in an interview, they go, Kobe, how come you always hog the ball? You know what he said? He said, I only pass the ball when I see somebody that's practiced more than me. And until I see somebody that's practiced more than me, I'm holding the ball. Because they don't deserve it. I do, right? So you can call him arrogant, you can call him cocky, or you can look at it for what it is. He built massive confidence in himself because of all the work he put in, which is why he was one of the best basketball players of all time. So, Josh, what does this have to do with trading? Well, you woke up today and you went in front of the market and you put on some trades. I want you to look at your trades and ask yourself, are you proud of those trades? Would you take those trades again tomorrow? Because every single time I ask myself that question, it's my goal to be able to say, yes, I'm proud of that trade. Yes, I'll take that trade tomorrow. Why? Because I've studied that approach. I believe in that approach. And the more and the better I can trade this approach, the more money I'm going to make. Every single time. We got traders that just joined HBT their first week, and they're already seeing crazy differences, right? And it's because they're putting in the work. They're reading the data reviews, right? They're showing up to the webinars. They're asking questions. They're learning the strategy. They're putting in the work required. See, every single time you lose in this game, you're losing to somebody else. There's somebody on the other end of your trade who's making money when you are losing money. How could you not have a strategy that you love and believe in? You need it. It's not a choice. It's a necessity. There's no way I could press buy without a strategy I love and believe in, right? And this is the strategy that we trade. So let's break down the pre-market plan, and we'll break down the trades that we took. It was beautiful, man. It was beautiful. And guys, it's honestly, most of these recaps are literally the same trades. We take the same trades every single day. Every day I take the same trade, and if it doesn't present itself, guess who's not trading? Me. Because it doesn't make sense to. Why would I waste my money doing anything other than trading my approach? All right, let's break this down. SPY, pre-market plan. Damn, we were on the money today. Look at this shit. I can't make this shit up. SPY, pre-market plan, critical level of interest, 549.60. Bullish scenario. With pre-market selling this morning, I will be watching for buyers to step up and show strength off open print in 549.60 for long plays targeting previous day low and end of day to soak up the pre-market gap down, right? This is what it looked like at 7:30 a.m. And this is what it looked like when the day was done. This was literally to a T what our bullish scenario looked like. Now, call me Houdini, right? Oh my God, how did he know? Guys, I don't know. But what I do know is what happens most often. Trading's not about predicting things. I never try to predict anything. I just understand the probabilities. I know every single day a market imbalance has an 88% chance of happening. I've collected the data. You want to see it? Like, don't take my word. Go look at the Discord. A market imbalance, which is the space between critical level and critical level, right? Open print to end of day. Open print to previous day low, right? The market imbalance, right? Meaning the space in between the open and a critical level. There is an 88% chance that that is going to happen. We just need to figure out if it's going to go up or down or both, right? So once again, some days it doesn't happen, right? Those days would be like, I don't know, New Year's Eve or, those random days where it's just straight chop and the volume is low. Yes, there are days where it doesn't happen, but it does happen more often than not. So you guys see how I've built my whole approach around what happens most often. I don't need to know what's going to happen. I just need to know what happens most often. And that's what the data gives me. It's not about predicting anything. It's about being able to make decisions based off the probabilities. You start doing this, my friend, and everything will really start to change for you. Right? So that was the pre-market plan. That's what we were looking at doing in a bullish scenario. In a bearish scenario, very similar, but I was looking for sellers to take control of this level, right? And if that's what happened, I would then take the market short and target 54327. So once again, it's either going up or down. I just need to figure out which way it's going. And how do I do that? The $1 million question. The HPT cross, my friend. So let's whip out the Discord so I can show you exactly where I got in the trade. So at 9:40 a.m., I'm in short. This is what the market looked like when I decided to put money on the line, right? I actually got in a little bit sooner, but it was selling off so fast. By the time I took the picture, we were already coming down, right? What about this chart pattern in front of you can we look for every single day? Let's talk about it. Number one, critical level. 54960, right? That's our critical level. And it's also aligning with open print beautifully, right? So once I see that, I see the red candle come in and I go, okay, if I get a green bar to be ignored, I'm in the market short. We literally have open print, we have moving average cross, and we have a green bar ignored. I'm in short right here. My stop loss goes above the candle, right? Beautiful. This was beautiful. Beautiful. This little trade right here, these 3 candles paid out 38% ROI on SPX. That's it. That's all you need. I take profit. Why? Look how far away we were from the moving average. What do I always say, guys? Pockets mean what? Pockets mean pullback. We don't like pockets. We don't hold through pockets. Pockets mean pullback. Pockets mean pullback every single time. If you ever see a pocket in between price and a moving average, get ready for the pullback. Is there a pocket right here? There was, and price opened up, sucked into it, and sellers defended it. Therefore, healthy trend. I'm in short as soon as this candle wipes out the bottom of this one. Bam. Very simple trade. Less than 2 minutes, 38% ROI, something like that. So then at that point, I'm pretty much like, dude, I think I'm done for the day. I was like, it's Monday. I'm trying to buy a house, so I'm going looking at houses. Beautiful trade right here. SPX showed it perfect too, right? So I'm done at 9:46. So it took 6 minutes for me to get in and out of the market, executing my edge, repeatable approach. Hold on one second. And guys, like, I just really need you guys to understand, if you could stop trying to be right, if you could stop trying to if you could stop trying to predict things. It's not about predicting, right? It's about reacting. I'm so happy you asked that, Steve, and that's okay. It's okay to ask, right? We all want to know what's going to happen. But Steve, I'll tell you this right now. I'll show you two scenarios, and one of them will happen, right? So let's finish up this trade, and then we'll go through tomorrow's analysis. All right, so our second trade, right? Very simple. Let's break it down. This was our second trade. I got in the market long right on this candle right here, right? Now, once again, why? Now, to break this down appropriately, let's go to my website and just flesh out real quick the criteria, okay? So, what's our approach? The HPT cross, right? Number one is identify the critical level. The critical level is open print, okay? Why is it important? It's important because the volume, right? Once again, we can't move price. We can't predict price, but what we can do is spot what the banks are doing. How do we do this? By watching the levels with the volume. Therefore, we will watch open print. Second step, identify the moving average cross. This is when the 5 and the 21 EMA turn from green to red or red to green. Step number 3, identify the RBI or GBI entry criteria, okay? Very simple, but this is our approach. And then number 4, we follow the cloud. Number 5, we log it. Okay, that's our approach. So let's look at today's price action. What do we do? Step number 1, identify open print. This is the 9:30 bell, goes off. Look at the volume. Is that excessive? Absolutely. Is that higher than normal? Absolutely. Therefore, we're watching the level. We shorted the market, but we're already done with that trade. Now we're going to see what buyers do. Price rallies up, comes down, tags it. Why don't I get in the market long right here? Well, there's no entry criteria. We need a way to manage risk every single time, right? So without that RBI or GBI, I cannot and will not get in the market long. This is the red bar that gets ignored. How do we know it's ignored? Because the next candle wipes out the top. That's it. That's our approach. That's all we have to do every single day. If we can do this and follow this, according to the data, we will maintain an 82% win ratio. That's it. So let's go back to today. Let's see when I got in the market long according to the Discord. In longs here at 10:54 a.m. Market looked like this. Okay, let's talk about it. Open print, trading off the open. Number 2, moving average cross. You guys see the indicator going off? Anybody that joins HPT, you will have these indicators, right? We give you the EMA cloud, we give you the pit numbers, and we give you the crossover indicator. Very simple, right? And the indicator doesn't get you in the trade. It doesn't make you get in the trade. It brings awareness to the system, right? The system needs to operate. It needs to populate. This is how it populates, right? So we get open print, we get moving average cross. Then what do we get right here, guys? A red bar ignored. We whip up, I go long, and my stop is below the red candle, right? So this is what the market looked like when I was entering into my position. And then we caught a beautiful move, right? Look what I put here. Let's get that 50 EMA on SPX, right? Here's me trailing my stop, right? This is how I manage risk, right? I'm trailing my stop. I got in the market here around 10:45, and it's already 11:05 right here. I'm still holding my trade. I just got out of drawdown, right? So think about that. For 20 minutes, I'm in the red. I'm literally in the red. You think I care? Absolutely not. Until the bottom of this candle breaks, I don't care. I'm staying in it. Targeting the 50 EMA. And what happens? We rally right up into it, right? It was a beautiful trade. Ended up booking it. And just look at what happened though. It continued to rally all the way up to our target and beyond. Right? So once again, guys, it's not about being Houdini. It's not about guessing what's going to happen. It's not about predicting. It's about seeing your approach and reacting, right? So Stoner Steve, let's break down what we think is going to happen tomorrow, right? Well, just like we said, it's not I never want to predict things, but what I can do is make an educated guess based off the principles of how the market works, right? So what are the principles? Well, the market imbalance, the pit numbers. Let's break them down. So every day I chart my charts the exact same way. I go like this. Delete, delete, delete. I pretty much get rid of everything. And then I go, okay, where are my pit numbers? What are the pit numbers? Previous day high, previous day low, previous day open, and end of day. These are the most important levels that you are ever going to trade. Why? Because the volume, okay? For instance, today, if I whip out SPX, look what price did. It literally gapped way down. And notice what happened here once buyers held the open. And once again, look, this is where I was going long, right? 10:45, guys. See, 10:45 a.m. My call out in the Discord was at 10:54 a.m., right? So once again, I'm longing right here off open print. I'm trading the pit number. I'm always trading the pit number. Why? Because what happens at the pit number, that's the story I want to trade. That's where the volume is. That's where the banks are. They're leaving their footprint. Therefore, that's where I'm getting into the market. Okay? Open print, break above it. I don't want to long this. There's no RBI. There's nowhere for me to put my risk. I don't want to long this candle. Thing's huge. And pocket. Pocket means pullback, right? Massive pocket between this candle and the moving average. So I'm not longing it. I'm waiting for the trend to get healthy and for price to give me that red bar ignored in long stop below. Just look at just pit number to pit number. For everybody that doesn't know, this is a market imbalance, okay? Space in between the open and PDL. The open and end of day, right? So on, so forth. All right, so let's go back to tomorrow's analysis, right? Let's help out. All right, so just like I said, every day, the first thing I do is map out the pit numbers. This is previous day low. This is end of day. Bam. What was it? 55939, 55939. That's close enough. And then previous day high. Okay, so now I have my pit numbers. What do I do next? I whip out the 1 hour time frame. And I go, okay, this is what the market looks like. So now, tomorrow, I could already tell this is going to be a massive sweet spot. Why? Because end of day and previous day high are close to each other. So if anything happens tomorrow off this level, I'm going to have a direct line of communication with large money, with the market. If buyers hold this level tomorrow, we are going to see this level. What level is this? Open print from Friday. So you guys see how I'm always pulling targets from previous day. Follow the volume, right? Don't make levels up off pre-market. That's retarded. Pre-market has no volume. Why would I ever target a pre-market level? It has no volume. That's not to say that pre-market's not going to have some play at it. Of course it's going to. But in terms of actually making an educated guess and targeting a level, I'm going to pick the level that has the volume. Right? So our bullish scenario for tomorrow would be if buyers hold previous day high and end of day, I will be looking to target 56433, 56670, and then we'll go here. Right? That's our bullish scenario. Our bearish scenario, say price comes down in pre-market, rips back up into previous day high, and then sellers take control. Then what? Well, same exact thing. But I now target, and it's going to be a hold on. Damn, that's a big candle. All right, everything's huge. This level right here is going to be my first bearish target. Once again, it's just a pit number. That's it. And then I'm going to whip out the daily time frame to capture my next. There it is right there. What's this? You guys see this candle? Well, the bottom of that candle will be my bearish target. And then if sellers take that level, I will then target today's open and then previous day low. So I'm always playing pit number to pit number, right? So once again, our bearish scenario for tomorrow is if sellers control previous day high and end of day, I will then look to take the market short, targeting 555 and then 54992 and then PDL. So it doesn't matter. It's either going to go up or it's going to go down. There's an 88% chance that one of those scenarios will happen. Therefore, I need to play the open just like I into one of those levels, right? So guys, I hope to see you. You guys already know I'm here for you, right? This edge we created, we tailored it so that any trader can execute and become consistent. If you trade this strategy on the 5-minute time frame and you actually trade it, you don't make any other trades, you will make consistent money. It's literally like it doesn't matter how long you've been trading. It doesn't matter if you can understand the fundamentals behind trading and you follow this strategy, you will crush it, right? So guys, once again, March 31st, promo code execute, and you get 20% off your first month and Trader Bootcamp. But guys, other than that, I love you. I'm here for you. Read the data, subscribe, and make sure you execute flawlessly tomorrow. Peace.